Welcome to episode 1 of 2019's CrystalCast. In this series we explore the stories behind the headlines and bring you news and opinions from industry heavyweights in order to make specialist finance crystal clear. Lots of headlines have been written recently about the death of buy-to-let. Is it true? Is it scaremongering? Is it fake news? On this edition of CrystalCast we decided to explore the topic further in a recent conversation with Marc Goldberg of Together and Joe Breeden of Crystal Specialist Finance. Welcome.
Thank you.
Before we start, Mark, can you tell us 3 things about yourself that either no one will know or 3 things that are surprising?
Yeah, well, I have worked at Together. Well, I think it's difficult for me to tell you things that you don't know because I'm quite an open book, but I have been at Together. I'm in my 30th anniversary year in 2019 of working at Together. I have 4 beautiful children. The other thing is basically I am very passionate about the bridging industry and the financial service in the specialised lending arena.
So Joe Breeden here. 3 things about myself that people are unlikely to know. I'm a huge Aston Villa fan. I also had England trials at rugby, and I've got 3 children.
So, in your opinion, what's the biggest challenge currently facing mortgage brokers?
I suppose the biggest challenge I would say at the moment is the uncertainty with regard to Brexit. What is going to happen, to the property market? The London market continues to be suppressed, although if you listen to a couple of things that people have told me in the last couple of weeks, the property market is still buoyant in London. There's still opportunities, but I think the actual purchase market, I think a lot of people are sitting on their hands at the moment waiting to see what would happen, which then affects, I think, the price of properties that sell. But again, I think we're very good at putting ourselves in the UK, reading the newspapers and having a doom and gloom, whereas, in reality, I think there was an auction yesterday from a company called Stretton's who said that there was the biggest turnout and he had the record sales numbers. So I think there's lots and lots of positives. I think we are going to have a tough couple of months. But I think once we see our way through this, I think the UK environment is still strong, unemployment's still low, and I think that the market will come back.
Yeah, I'm going to agree with most of that. I think the biggest challenge facing brokers is probably the raft of changes to the buy-to-let market over the last 2 years. The PRA came out with a set of rules that restricted a lot of lenders. And the government got together with the Treasury Department to tax the living daylights out of the personal ownership of buy-to-let. So, I think there's complexities around that. We've had a lot of changes with regards to EPC certificates, HMO licensing laws from October last year. So I think just getting abreast of the changing faces within the market, which the guys have been pretty comfortable with, I think has been the biggest challenge so far. And we've probably not seen the end of those. Again, with taxation relief, still got 2 years left of clawback, sort of moving forwards. But I think moving forwards, the big challenge for the brokers is going to be diversifying the income from all the PT stuff that they've been doing for the last 12 months. I think product transfers featured about 40%, account for about 40% of the income for the average broker from a stat I read last year. That's not a limitless, bottomless pit. Moving forwards, so I think brokers have got to face up to the specialist market and opportunities that lie within.
Brilliant, thank you. Mark, you touched on there the success of the auction yesterday.
Yeah.
Where do you see the most opportunity in the industry currently?
I still think buy-to-let is a huge opportunity. Property itself, you look at the stock market, it's volatile, putting money or leaving money in the bank. I think for long-term investors, buy-to-let is still, or property is still the best investment that you can have in the UK. I suppose going back to Joe's point before, I think the stamp duty, the increase in stamp duty for people with buy-to-lets is a problem. I think the increase in stamp duty in general is a problem. Yeah. I think anybody now looking at larger properties, would think twice when you've got maybe sometimes stamp duty at 80, 90, £100,000. So I think that's a problem. And I also feel that, the way the PRA is looking at how you do 125, 145 and 160% on ICR calculations is probably stopping good customers who have got the affordability to be able to get mortgages in the marketplace, which is a real shame. And I think there's a lot of buy-to-let landlords, in my opinion, who are business savvy, know what they're doing, are not relying on the income from the property to live off, but are trying to build a portfolio for later life, and kind of they're being impacted by those changes. So that's my
I absolutely agree with that. But I think out of that, there's a lot of opportunity, isn't there? I mean, I think both our businesses undoubtedly would have seen an increase in bridging on smaller residential properties where people are looking at enhancing the capital value. So for the last 10 years, it's been living off the rent. How can I hike the rent? How can I squeeze an extra quid out of it? Well, now the taxation position through stamp and interest relief has made it untenable. So these savvy individuals are looking at enhancing property values.
Totally. And I think it's you have to look at with regard to the shortage of housing in the UK. People want to leave home earlier. People are living longer. Divorce is at the highest rate. So there is still a huge demand. Rents are actually increasing across the board. So it is a good, safe investment, but mainly for long-term investors. So, buying a property for £100,000 on a Monday and it being worth £150,000 3 months later, those days are long since gone. But I think certainly when I think about what people can do by keeping £100,000 sat in the bank account earning 1% interest, it pales into significance. It does. So I do feel there's big opportunities. I think we need to make it easier for these sort of people to one of the we talked about opportunities. People with pensions, they can buy a commercial property but can't buy a residential property. For me, I think the government needs to take a long, hard look at what they are doing and how they're doing it, and make those changes where people can invest. And think pensions, people look at it as a long-term investment. So why shouldn't you be able to buy residential property but you're going to buy commercial?
Yeah, so, I'd agree with that. I mean, funny enough, we've had a couple of customers. So I mean, the big buzzword of last year was portfolio landlords. Portfolio landlords here, there, and everywhere, right? And we had one customer that looked to incorporate her personal portfolio of 200 properties down in the south of England, and it was, from our point of view, it was a great deal. She was fairly low geared.
Worked all every day. Together we could be stronger.
Something like that. Not too far away.
You've got to make that crystal clear, please.
I could, yeah, absolutely. Without the plug there. So she, we got the terms from a lender. Unfortunately, it wasn't together because she was particularly rate conscious, this individual, having been so lowly geared all of her life. And we could have walked her through that incorporation bit from turning her portfolio from sole trader into limited company over a 2.5 year period. She had KPMG doing the taxation advice, so she'd gone out and done the right thing and not relied on what her broker was telling her, but actually gone and sought the professional in that field with regards to taxation relief. Went to Val. She paid for I think it was about £30,000, £20,000 she paid in valuation fees. She got the valuation fees back. And then because of the Brexit uncertainty, she decided to put the whole thing on hold until after we'd left. And the reason wasn't because she thought the house prices might drop, but she actually thought the government would reverse some of the decisions out and offer us some reliefs as a result. All this stamp duty stuff would be reversed out. She thought some of the ICR calculations might be softened within the residential market. So she's actually hedged paying more tax this year rather than the cost of incorporation, the new refinance, yada yada yada. So absolutely, I think the government needs to help out, and I think a lot of buy-to-let professionals in that sector are desperate for it and crying out for it.
I think that you've touched on something there. I think lots and lots of people are nervous about the property market, what the government's going to do, what will happen with Brexit. That lots of people are sitting on their hands at the moment. Yeah. But there again, if you've still got lots of cash, this is a great opportunity to potentially, I wouldn't buy a property today and pay the asking price. I'd be offering 10, 15, 20% below that. I think people are worried about Brexit. People who have got high mortgages are thinking of maybe potentially selling up, renting a property. We're seeing that more and more now. So I think there's lots and lots of opportunities. I just think we need to see where the next few months go. But the UK will still continue wherever. It'll still continue trading. People still buy properties. People still sell properties. So I think we've just got to embrace it. Understand what's happening. Look at digital as being you talk about opportunities for brokers. Digital is a fantastic opportunity. I think now this gives us everybody a great time to look at how automation can play a part in their business, and that's from retail to commercial to mortgage brokers to lenders. Together now, the big focus for us is how do we reduce the cost of processing, underwriting and completing applications, because as you get bigger, you can't afford to take on more and more staff. And I think the customer journey cycle of things is customers now expect to be able to self-serve themselves, so they can input their income, they can make a mortgage application at 12 o'clock at night. So those days of call centres and things like that are gone. But where there's a gap, there's an opportunity, and that's what we have to look at as a business. And you've got to evolve constantly. Sitting on your hands and saying, "Oh my God, Brexit's going to happen, and what we're going to do," and trying to second guess, I think you'll get left behind.
You think again. That's a great point about digital. Say you are a buy-to-let investor or professional landlord. You think of the tools that these guys have got access to now to research an area,
Absolutely.
Find the property, know what the average buying price is, the average market rent. Even 10 years ago, all that stuff was available. You're absolutely reliant on local estate agents and valuers, and now there's countless algorithms out there that provide these guys with data and research. So if they do think there's a good opportunity on the go, they can instantly stack, make that decision making process quicker, and hopefully get access to finance.
As long as investors focus on yield rather than capital growth, it works. Those ones that are focusing purely on capital growth. I never really understood the London market where you buy a property for £500,000 and you're going to get 3% yield. It never kind of made sense to me. It was interesting. We had a client that came in to see me on Monday who buys property in Scotland, and he pays between £25,000 and £50,000 for the property. He bought one last week where it's 4 flats in a building, where he paid £30,000. He's got to spend £10,000 making improvements, and he can get £1,600 per month in rent.
Wow, amazing.
So you talk about opportunity, and as he said, the capital growth, the £40,000 property or £50,000 property might be worth 60 in 10 years, but you think about the amount of income that is had from that property, and if one of them becomes vacant, it doesn't really make that much difference. So lots and lots of opportunities. I think people need to think and act differently. Buy-to-let investors need to think and act differently. It's the quality of the tenant, it's basically making sure you get the right references. More long-term tenancies. People are now looking at 12, 24 months. If you can get a good tenant who looks after the property, they'll paint it, they'll decorate it. So for us, I think definitely the buy-to-let market is still very strong. And it's interesting because we were talking about where we see with the short-term market. I still think the auction market is a strong market for people. In an auction you've got 28 days to complete. Let's face it, there's very few companies that can actually complete in 28 days. I'm not quite sure why that is yet. I'm still trying to work it out. Isn't that complicated for us? It's like getting dressed in the morning, isn't it? For us, we just get on with it and do it. So, do
you think the auction market has been a little bit of a seller's market rather than a buyer's market over the last 3 or 4 years? Again, I'm not going to give out specifics here, but we've seen auction catalogues going out there where the top end guide price is probably 30 or 40% under probably what the gavel price is going to be. So are these guys? Is it a case of they're underpricing to over?
Well, I think there's a guide, and then there's a guide price to what price they will actually sell at. So they start off at £35,000, you get it up to 45, and they can't actually sell it because there is a fixed price that they want to get. I still feel that there are good properties to be had in an auction. I think the auctions will change where people don't have to attend anymore. It will go digital.
Yeah.
You know, most people have done the homework anyway. Why should you want to go and stand in a room with 150 other people when you could do it from your front room? You know, so I think the auction market's going to change. I still think that there is big opportunities for quick transactions to be done. We're seeing banks are definitely asking people to basically give them a discount if they don't want to be in a particular sector, but you've got to pay your money in 28 days. So again, that's a big part of it. And investing in your business. You know, we see the internet now being such a major part of our lives. People need money, quick money on their business to be able to go and buy some stock, to be able to then sell it quickly. And they use it more like an overdraft facility, because trying to deal with high street banks today, for you know, if you're a small business, SMEs, it's really difficult. You know, and if you're not able to do that, where do you go? I think the challenger banks are morphing into the high street banks. So opportunity in the specialist lending is something which I would probably say people now, if they're told no, it's interesting. We've done some stats, I think you've probably seen it, is, you know, people, if they get told a no, they've no idea what to do. They're almost embarrassed by it.
It's that next step.
So for us, we see a massive opportunity now. And if you look where rates have gone in the last probably 5 years in short-term finance, so we've been doing it, I've been doing it 30 years, you know, so I've seen what's happened with rates. It's becoming more palatable for people to take short-term funding, and if it takes 3, 6, 9, 12 months, it's not so much of a problem, because you're not paying 18 and 19%. You know, you're down to rates of 0.49% a month, which is, you know, people can actually afford.
It's fabulous. I mean, you think about where mortgages were, you know, 15 years ago. If it's first time buyer market at 90%, you were paying nearly 7%, and now you can bridge for less than that, no exit fee, and that's on investment or on your occupier.
And you think about the regulated bridging market today. You want to buy a property today, and you've seen the house of your dreams, and your buyer is pulled out, or basically you're in a chain and that falls through. You've seen the dream home. Your wife's she's already picked the curtains, the bathroom. So this is now an opportunity. It might take longer to sell the property, but if the people have got equity in there, they see that as a big opportunity. And for us, what we're seeing is that certainly in the regulated the space of short-term funding, these are prime borrowers who, for a short period of time, up to probably 6-9 months, they've found the property, they want to buy it, and then they're still going to have their property on the market, and I think that's helping stimulate the market.
I agree with that.
So I think there's a big opportunity.
Do you sort of see? I mean, we as a business have probably seen a bit of a spike in it. You know, we've seen a lot of UK holiday lets, or these corporate sort of Airbnb type deals. You know, something that I've never seen before. Maybe the Brexit vote. So I think a lot of people are hedging on UK holiday makers. You know, I think it's quite an interesting topic for me, because some lenders absolutely hate them, some lenders are absolutely fine with it.
I think that the difficulty about the Airbnb stuff is trying to regularise that income, because it's very difficult to be able to say that you're going to have that property let out for 52 weeks of the year. You know, on a short term let, it's 6, 9, 12 months. You get that money, and they've got to give a month's notice and everything. The Airbnb, I think it's a really interesting model, because you get lots more rent for probably a shorter period of time. So you know, sometimes it could be a night, or it could be a week. Listen, some of them have it for 6 weeks, 8 weeks, whatever. I think Airbnb has opened it up to the world to be able to rent properties, whereas on rentals in the UK it's normally just UK people. So we like it, but obviously, as a regulated lender, you've got to be able to demonstrate that customer's got the affordability. So, there's an algorithm to say how many months, and it's not been going as long. So you couldn't put down and say, for the last 3 years it's been rented out for 40 weeks of the year and you can work on it. It's still a new market. So I think as lenders become more comfortable with the data that's been given, you could work out the affordability. But together we're fortunate. We'll take into account, because most people that have got Airbnb properties, they have got supplementary income. It's not their mainstay. So we're prepared to take a view, as long as the customer can demonstrate that they have the affordability, that if that property isn't rented out for a week, 2 weeks, 3 weeks, 4 weeks, if they can afford it,
they've got the shortfall.
Absolutely, and that's the key.
It's common sense, isn't it?
Yeah.
Brilliant.
It's really common sense.
Yeah, there's really interesting topics there. Buy-to-let market's been talked about heavily recently as being an area of demise, or an area where people are struggling. As a business last year, we saw huge growth in buy-to-let.
Yeah.
Where do you think those customers are coming from?
Well, I think first and foremost, limited company. Anything limited company was always classified in the old days as commercial. So obviously this business being founded as a commercial brokerage, we've always had brokers come to us in the marketplace looking for assistance with their commercial transactions. So I think a lot of unfamiliarity with the limited company, the corporate structure, SIC codes, ownership, share percentages, SPVs, all these things are quite new territory for historic buy-to-let brokers. So, that's probably where I'd say we've seen a sort of a big spike from. But I think it's become more complex. For me, I think, look at the nature of borrowers that we've seen in the last 12 months. Again, it isn't just limited companies. We've had offshore co's, we've done non-doms, expats. You've had to top slice background income. You've got portfolio refinance, HMOs with all their own regulation. I think something that was quite a vanilla space before, because of regulation and the macro environment that we're currently in, and a worldwide environment that we're now operating in. That simple Turk 2 down in Walsall led to a family and owned in personal names. They're getting fewer and far between, because the yield and the opportunity probably doesn't lie in that market.
But let's face it, who's giving the stats out? If you go to the main high street banks, they've tightened up the lending criteria. They've made it harder for obviously people with their ICR calculations. They're not doing limited companies. They don't want to do portfolio landlords. That's what it's been judged on. If you look at, let's say, in the specialist market, people like Precise, Paragon, ourselves, we must be 40% up year upon year in buy-to-let. And there's no shortage of demand. And again, interest rates being as low as what they are is a real attraction, number one. Number two is, to put money in the bank today, what would be the point on that? And I think people who are left properties in wills, who obviously become I think it's classed in the trade as accidental landlords. Why sell a property today? You're better off hanging on to it, renting it out, doing some work to it. People are converting houses into 4 flats. So I think that the perception is that buy-to-let is falling by the wayside. I see it far from it. I think there's still a huge demand, and there'll continue to be. A lot of house builders are, if you look, you've got the help to buy scheme, which is fueling the first time buyer market, and then stock that they've got left is being snapped up by buy-to-let landlords who are probably paying 20%, 25% cheaper prices than what they were originally marketing out for the last 5-6 houses or flats. And I would say that most apartment blocks that are being built today, probably most of those are for buy-to-let.
Yeah, I'd agree with that. And I think, you're absolutely right. And I think another big part of it is education. I think there's more education because of the internet and this, that and the other. There's more education around investing in buy-to-let and property, let's say, backed up by a robust legal system, a great land registry, probably, the best land registry in the world. I think gives these guys confidence compared with the stock market, or, what was the phase of 2 years ago? Bitcoin. All these things that are a bit of a dark art for some individuals.
Well, it's interesting that you said that, because the UK is seen as a safe haven with regulation, land registry, solicitors, most other people. In Spain, there's a lot of people that own the properties. It's not a natural thing for them to do. So if you've got money, you're in any of these sort of states, you would think now they come over to the UK, they buy a property for 80, 100, 150,000 pounds. They can get a rental income from it. It's safe. It's robust. So I think from our point of view, we see the UK is still an attraction for overseas buyers to come in.
Agreed.
The way the currency and the exchange rates are today. Of course they're hedging it. There's people that probably in the last 12, 18 months have probably earned 30% on their property just from the currency. So it is still a huge opportunity. I think it will continue to be an opportunity. Until interest rates change dramatically, it is still that you can get buy-to-let rates. Starting at 2s and 3s. There is still a big opportunity, and the average yield is 4, 5. In some areas, it could be 6, 7, 8%. It's interesting. Most of the people in London think that places like Birmingham and Manchester, you have to have a passport to get in it because they can't. It's unheard of. And I think what's really sort of interesting is in the last few years, when I tell them you can buy terrace property in Manchester for 45 grand and you can get £500 a month rent, they're sitting there thinking it must be like something out Coronation Street.
But there's no jobs, they're not going to pay the rent.
Completely. And I think that is something that if you track back when properties first got recorded, yes, there's been blips, yes, there's been recessions, but over that time, they've always continued rising, and they'll continue it. So, it is, buy-to-lets are great for long-term investors. For short-term investors, it is a really risky market.
Yeah, and I think the days of people living out of that income are gone. That is one thing that's done.
I agree.
It is now the pension, especially, an added driver I was going to add to that is the fact that people just aren't having the pensions that they once had.
Yeah.
And gambling away a pension fund on a stock market or investing in your own portfolio, I think is becoming, the second one's becoming, the matter of choice really for a lot of individuals.
So,
I'm absolutely in agreement with all that.
It's too soon to be writing the obituary of the buy-to-let market.
Totally.
I think with sterling where it's at, and base rate where it's at, I can't see.
But I still see, whatever happens, people will still buy property. It is just a natural thing for the UK and overseas people. There is lots and lots of value, and there will continue to be value. Whether it will continue at the rate it has been, only time will tell, and we'll know that with interest rates. But I think for the foreseeable future, if you've got money at the moment or you're left money, the best thing to do is to invest it in property and try and forget about it. Agents will manage it for you. Yes, you'll have some voids. Yes, you've got to do some painting, decorating, whatever it may be. But that is a regular income that if you can put aside and invest that into buying more properties.
Yeah, absolutely.
It would help. What's really been unhelpful is what the government have done with tax, stamp duty, and all these different things. It has made it hard, and I think at some point, hopefully, like your lady with the 200 properties, I do think at some point the government will look at this and say, we maybe need to relax it. I'm not saying they'll abolish it because that won't happen, but certainly relax it because people are, second guessing now or second thinking about, when you go and buy a property for £100,000, you've now got £3,000 stamp duty. That's a sizable sum for people to now find, and it is putting people off.
I absolutely, agree, but I do just hope that the government, now that everyone's incorporating, and there's a lot more transparency around who owns what because it's a company's house and it's publicly available, that a new government, let's say, comes in and all of a sudden the quick win to reduce the government debt is, increase the corporation tax rate or whatever it is that they might, just hope that we get a bit of sensibility around what is a great industry from the government, and it's been.
Let's face it, the government earn a fortune from people who are buying buy-to-let properties in the first place, and it is stimulating it, because ultimately, if people can't get private housing, they've got to go to the council, which puts pressure on the government. All these things, it's all linked. It'll be interesting to see what happens.
Brilliant, thank you for that. So if you could make one change to the mortgage industry, what would you be looking at?
I think it's an interesting one. The mortgage industry question is for the regulator to understand more about specialist lending, because I think they are very good at working with the larger banks and challenger banks. They are less or they've not made as much sort of sacrifice or get to understand the market, I would probably say, in the specialist market, or people who have had problems in the past who need to be looked to the future. Because you look at these now, we're calling them prisoner loans. These are people that are trapped in interest only mortgages, where the FCA have begun to understand that and are making changes to help them and relaxing some of the income criteria. So I think it would be for the regulator to work more with the lenders, let's say, who are helping customers rehabilitate themselves through past problems. If you're asking me about what I would like to change within Together, I think automation and basically thinking differently is critical to our business. We've had a business that talks about common sense. The common sense thing is that I think 80% of the work we do, we could automate, and the 20% of it is where we still want to have a common sense approach, where you say, or Crystal will say, look, can I have a referral on this, because I've looked at what the income is, and the customer doesn't spend £200 a month on food, blah, but whatever it is, so you can still have that interaction. So I think from us, we need to be more transformational, and that's certainly something that I think this year is definitely going to be something that we invest heavily in, because I think if you continue thinking the same way as what we're thinking, we'll become dinosaurs. The way a customer interacts today is different to how it was 18 months ago, to 3 years ago, to whenever. So I think you've got to try and understand, there's millennials who all they want to do is off the internet and they want to speak to anyone.
2 clicks.
My era, all I want to do is speak to somebody. So I think if you can service that customer, there's certain parts of the mortgage application you can automate. There's certain parts of things where potentially you might have to speak to the customer or get them to do something. So I think for us, I think the regulator needs to understand the whole market and probably understand it more. And I think from our perspective, I think transformational and automation, but still to understand that there's a customer at the end of the journey, I think is key.
Yeah, great points there. Echo a lot of that thought. The big thing for me that I'd add on to that is, I think as an industry, and that includes the regulators, the lenders, the packagers, the associations, I think we all need to do more to educate the borrowers and perhaps the smaller brokers out there of the opportunities that lie within. One thing that when I was sitting on the board at the Association of Bridging Professionals, that absolutely astounded me was Rob Jupp of Bright Star led a charge on the FCA to try and update CMAP. So CMAP came out with MCOB in 2004, and one thing that absolutely astounded me was that the syllabus for CMAP that brokers are still taking today in 2019 hadn't been updated since 2004, and it wasn't seen as a high priority from the regulator. So you've got things like regulated second charges, regulated bridging loans, all these things, never mind the taxation changes, what constitutes taxation advice or not for buy-to-let landlords now. All these areas within a scope of everyday business for a broker who is CMAP qualified, he has taken an exam that for me is out of date, or was out of date when we were looking at it with the ABP 2 years ago. So I think that doesn't just fall on the regulator, that falls on the trade bodies, the lenders, all of these people to work together really to just educate, create awareness, and ultimately the customer will win as a result. And that's the big thing for me.
Right, thank you to both of you. That was a really interesting session. I'm sure there's a lot of topics in there that brokers will take away and hopefully contact us to hear more about. Thank you both.
Pleasure.
Thank you so much. Really enjoyed it. And if you find any opportunities where you think there's any gaps in the market for us to be looking at, I would welcome the opportunity to discuss it with you another time.
Yeah, and I think
And if we could
feedback
have-
would be good.
Yeah.
To hear the rest of the series and be notified first of future episodes, hit subscribe. And to discuss any of the topics covered in today's CrystalCast or any other specialist finance requirements, call us on 01827 301070 or visit our website at www.crystalsf.com. Thank you to today's guests, and as always, thank you for listening.